straight off, let me now bring on board Mr. Ramesh Sopti, Managing Director and Chief Executive Officer of IndusInd Bank. Mr. Sopti, morning. Thank you for joining us. Sopti, let me start with something which is of immense market curiosity. Dhanlaxmi Bank, and I'm sure you must have guessed my question.
Yeah, I think there was all sorts of rumors flying around late last week. And although we didn't issue any press release, whoever called us, we told them clearly there's absolutely no base in that rumor.
Can I archive your statement that you're not interested in buying Dhanlaxmi Bank and they've not approached you, and even if they approach you, you will not buy Dhanlaxmi Bank?
Well, we have not been approached, and at this point of our growth story, we don't see this sort of an inorganic play coming into play.
Why do you say that? Because Dhanlaxmi Bank is available at a price to book of something like 0.4. 0.4 for a company which has good solid network. I mean, they have about 250 branches. Isn't that a mouth-watering deal?
I'm sure it's mouth-watering for some player in the market. But as I mentioned, it's not sort of something on our plate as of now.
Mr. Sopti, the RBI has released a discussion paper to introduce dynamic provisioning norms as well as remove general floating and counter-cyclical provisions which are ad hoc in nature. What would be the impact on your company, and will this entail higher provisioning for the banking sector for the next few years?
I think the whole purpose of these draft guidelines which have come in is really to, create a smoothen out the volatility in provisioning that one has seen in the banking sector, not only here, but I think overseas as well. So this concept of dynamic provisioning has sort of gathered steam all across the world, and I think it only stands to reason that it should come on the Indian shores as well. So I think this move is a welcome move. Certainly the idea would be to immediately make more provisions, but I think over a period of time we would see that these provisions would sort of smoothen out, and provisions would of course vary from bank to bank depending on the sort of portfolio that you carry. And of course this new concept of the loss given default, I think we were already using this concept in some way internally, not for making provisioning, but to really gather the value of the security, etc., that we had on our books. So I think it's a move that whose time has come, and it's welcome that RBI has already initiated discussions and is taking feedback.
Mr. Sopti, if I look at IndusInd Bank now, IndusInd Bank clearly has a couple of standout features. A, strong credit growth which is higher than the industry. B, NIMs which are one of the highest in the industry. But now that you have a large base, are you confident of maintaining a credit growth which is higher than the industry and NIMs which are much higher than the industry average?
See, our credit growth has hovered around the 30%, and certainly it's higher than the market. But we are still coming off a relatively smaller base. So I think 16 quarters we have stuck to a growth of around that 25-30% mark, and the only guidance we do give is that we want to stick to that growth rate. We are seeing a good throughput. We are a working capital bank, and working capital hasn't suffered so much, as a consequence of the interest rate hikes and the illiquidity. So we are pretty confident that maintaining a 25-30% credit growth is not going to be an issue. NIMs, you see, last 3 quarters, certainly I think the whole market has suffered NIM compression because liabilities have run up much faster in terms of cost than the loan book. We are all waiting now for the reversal of the rate cycle. The reversal actually would be beneficial to us. We have a large fixed rate book, which is the vehicle finance book, which has grown very nicely, and delinquencies are under control. So we would reckon that a 50 basis points, for instance, cut in the rates would be very beneficial to us in terms of NIM.
Mr. Sopti, you have a legacy issue of consumer finance. Is that legacy problem now behind IndusInd Bank, A? And B, you're confident that you will grow at 30% plus. But what could really challenge your conviction?
See, that legacy that we talk about is really the vehicle finance book, which probably today is one of our USPs. There's a USP in this bank. That book is growing very nicely. Delinquencies have sort of surprised the market in terms of the low profile. So we continue to grow that book at between 35-40%. We've also sort of broadened the book with the consumer finance book and introduced some new products there. So if you combine the corporate book on the one side and the consumer book on the other side, I think both are showing good traction. And I don't think it's so much of a challenge for us to show the 25-30% growth, as long as we can keep the cost of credit under control.
But will you be able to keep the cost under control? Because the cost of raising fund is now getting more expensive.
When I said cost of credit, because I meant in terms of the provisioning and the write-offs. Okay. We call that cost of credit. So that part is, we had a very toxic book 4 years ago. We've cleaned out that book over these last 3-4 years. The delinquency profile on our consumer finance book has remained very, very stable. And in fact, it has improved over the last 4 quarters. So I think that we have a vision, a clarity of the sort of loan book that we have, and we can see what's coming for the next 2, 3, 4 quarters. So I think we are confident that the trending that we've seen on our cost of credit will be sustained. And in fact, this year our cost of credit may be lower than last year.